What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Um, Tonight, we are going to be going over several pairs and looking at Friday only. All right. Um, we're looking at Friday because Friday is always day 3 according to the static weekly day count, right? And I want to go over with you these trades, and I want you to keep in mind, right, that we want to concentrate the majority of our efforts on easy trades. All right. Now, trading isn't easy. We all know that. It's difficult. Okay. But we make it more difficult than it ought to be by trying to trade every single day, even when we have a bad chart. All right. Stacy is the first person that I ever heard talk about well-engineered charts, right? And a well-engineered chart is a chart that has very clear price action, okay? You are able to read it clearly. It's clear as day what's going on when you have the right information, right? It's the same way I've talked to you guys about it before, how I can profile a pit bull from a mile away, right? I can tell what kind of breed that dog is because I've spent a lot of time around that dog, right? So I can see it from a distance. That's the same way that we want to treat the market. We only want to trade the days that we can spot from a distance, okay? They're obvious to us. Now, let's get straight into it, all right? We're looking at Bitcoin first and foremost, all right? And we're trying to keep this as simple as possible. All right. So we're going to be looking at this day, Friday. Okay. And if you remember our good old pictures, that's exactly what we have here on Friday. Okay. That spike to the upside for the trade lower. All right. And that is a well engineered chart. Okay. Where we go just outside of the previous day's boundaries and reverse. Okay. And so here you can see that we have the levels painted on the chart here in the previous day's high. You can see how this market breaks out of the previous day's high, puts in a reversal pattern, and then goes lower, breaking the low of the current day, putting in a new low on the day. All right. Now, you can see I've traced the master pattern here for you. And I've done this on most pairs that we're going to be looking at so you can get the hang of this, okay? So we're looking for that peak formation, higher high, or lower lows for the trade, okay? Now, it doesn't really matter. You could have used this peak formation, but I used this peak formation just because it's more recent, all right? So we have our peak formation low in London, a peak formation high in the New York session, all right? Right around the equity hour, okay? And then this market dumps down, okay? Because going up from this point, we've been putting in higher highs, okay? Just new highs on the day. And then suddenly we drop, we put a lower low on the inside here, all right? And the safe bet, and I'm showing you this on different time frames, different entries on different time frames, okay? You can see we had that close and breakout previous day. We break out of that previous day's high going into the session, right? We're pumping up, triggering higher time frame traders into this market, right? The safe entry on a 15-minute chart would be at the break of that lower low on the inside, right? And remember, we have this big engulfment here on the 15-minute chart. That 15-minute engulfment is a 5-minute or 1-minute M pattern, right? And you can see this larger M pattern here on the 15-minute time frame, right? So that's our entry. When we break that lower low on the inside, we target the current day's low, right? Okay. Now here, we're looking at the 5-minute chart. As we drop to lower time frames, we may be able to secure a better entry or a more precise entry into the market, okay? But sometimes just sticking to the 15-minute chart can work wonders for your trading. Okay, it can make things a lot clearer for you. If you find yourself, messing up or whatever on the 5 minute, the 1 minute, just go to a higher time frame, right? But here's the 5 minute. And what I'm showing you here is maybe a little bit more advanced for people who have seen this type of play over and over and over again, okay, where we break the high of the previous day, put in those lower lows, right? You can see the big M formation. And you guys know me from the beginning of this. This is what I'm telling you I'm looking for. I'm looking for M's at the high of the day, W's at the low of the day. But you can see, right? We pump up, we put in that lower low on the inside, we pump back up, can't quite get all the way to the high, but we pump back up, right? Then this market engulfs up here at the top. But here's our EMA. When we're breaking through that EMA, we also have the pin bar right here for the entry, okay? So we can get a little more precise with the entry. Here's the 1 minute chart, same entry as the 5 minute chart, but what I'm showing you here, right? Same thing. We pump up, put the lower lows in, pump up, and then when we drop, we have this sideways coil into that EMA, pin bars for the entry, okay? Engulfment right there into that EMA. And you can see, and we're going to look at this on other charts, that on the way down, we often will have these small pullbacks into that EMA or even just through the EMA to continue going lower, right? Because if we are functioning under the thesis that we are going to be going lower, right? This is potentially the high of the day locked in place. We're going to be going lower. We're going to be putting in lower lows on the way down, which means that we're looking for pump, coil, dump on the way down. So you could be, entering in here, adding in here, maybe adding in here, or you're taking profits off, maybe re-entering the market here. But the point is, you know what you're looking for. Okay, here we're looking at GU, or the British pound, and US dollar, all right? And you can see, again, we have a market, and remember, we're looking at Friday. We have a market that breaks a previous day's level and then reverses, right? Here's the previous day's low. This market breaks the previous day's low, coils sideways, and then pumps up through the current high of the day back into levels from the previous day, right? And you can see our master pattern here. Peak formation in Tokyo, peak formation low in London, higher highs on the inside, all right? But that step 3, it's not completed just because we have the higher highs on the inside, okay? We want to see those higher highs broken. We want to see more higher highs put in. So step 3 is really completed when we break that level, when we put in new higher highs, okay? You can see, excuse me, as we break that level, we put in these new higher highs, okay? Then the market dumps down. We're working the lows, right? Going back into these lows from the London session. And if you can see, we have a micro W formation here, okay? Engulfments, pin hammers, all right? And you can see when we zoom in, what I'm showing you here with this line, this is a potential entry when we break that middle structure of this micro W, right? We're coiling through the EMA for the pump, all right? And this trade takes place right around 10:30, all right? So sometimes you're going to have to be patient and wait for this, but this is a well-engineered chart, okay? We're pumping up. We dump down into levels to the left for the pump up, okay? And we know that we're looking for the dump and pump because of our master pattern, okay? We have our peak formation high. The market is going lower. A peak formation low, the market refuses to go lower. It can't get down there. We put in a higher high. We break those highs, letting us know the market wants to go higher, right? Then we know we're looking for the dump, coil, pump, if we can get it in our session. And here it is. Here's gold, okay? Here, we're not even looking at the previous day's levels. We're just looking at the master pattern. We have our peak formation high here in Tokyo, peak formation low in London. We put some highs in here, right? And then we proceed to break those highs on the way up. Okay. Now, you can see what I'm telling you here, right? That we have this peak formation, but now we're not making any more lows. We've started making higher highs and higher lows. We've started to go up instead of go down like we were. Okay. And that's the whole point of this 1, 2, 3 steps. We're watching the market shift. Okay. Now, what I'm showing you with these lines are potential entries, right? Gold may open at 830. We had that pin bar down there, okay? Engulfments. We could get in here, right? But maybe it doesn't seem that obvious, right? Or it doesn't seem that safe. You don't really want to get in there yet because these highs have not been broken totally, right? They have been right here, but we don't really have an entry, okay? We could get in here. It doesn't matter, right? But if we wait, okay, this market pumps up, breaks those highs, and then dumps down again right around 10 o'clock. You know, this coil sideways, I think, is about, 15 to 30 minutes or whatever, 15 minutes sideways here. So we dump, coil, pump. And if we zoom in here, you can see our pin hammers. We have, these candles, these big green candles that take out all these levels. These are potential levels for entry, and you see how price is interacting with this EMA. Okay, we drop down, we're below the EMA. Right here, we cross over that EMA after coiling sideways and then pumping up. You could have secured maybe a safer entry there, right? Had your stop loss down here, aiming to take out these highs and just hold that thing. You know what I'm saying? All right. Here we're looking at the Australian dollar, US dollar. Excuse me. You can see we have our close in breakout. We close above the extreme of the previous day, right? But here's our previous day's low, our previous day's high. You can see right here in Tokyo, we just barely break the previous day's high and then dump down, okay? Sometimes when we get this right here, this is our higher high on the day, right? Sometimes when we break out of that high like this, it can sort of be like a clue of that we're trying to go higher, right? But to simplify it, we have our master pattern. So we have our peak formation high in Tokyo, peak formation low in London. We put in this higher high on the inside here, okay? And then we break those levels before going into the New York session. So we were putting in higher highs now. We're no longer going lower as we were from Tokyo to London, right? All of a sudden, we stop going lower. Then when we zoom in here on this 5-minute chart to, continue to denoise it, right? On the 1 minute, there's a lot of noise. Go up to the 5-minute, it may seem a little more clear to you. But since we have this idea, right, we're breaking these highs, we have our step 3. So on the way up, while we're putting in new highs, we're looking for opportunities to get into this market when the market dumps, right? Coil and pumps to continue going higher. Okay, so you can see 9:30, we're dumping through that EMA. Okay, putting in a new higher high, dumping, coiling into that EMA right around 9:45 again. Okay, and then as we continue to go higher, you can see that this market continues to dump and coil into that EMA. Right, goes up, dumps, coils into that EMA, and so you can secure entries into the market by using this universal entry criteria, the 20 period moving average. All right. And this is the type of thing that we are looking for. Here, I believe this is the last pair we're looking at, the US dollar, the Swiss franc. Again, we have a day here. Here's our previous day's low, our previous day's high. You can see in this London, New York gap time, we break the high of the previous day and we coil reverse for the dump down to the previous day's low. Okay, and we still have our master pattern in effect. Here's our peak formation low, peak formation high, and then we start putting in lows, right? And you can see There's that first lower low, then we break that lower low and put in the next lower low, then we break that one, put in another lower low. All right, so we are on our way down. When we're on our way down, we're putting in lower lows. We know that we're looking for the pump and dump, right? Lower lows is the recipe, is the setup for the pump and dump type of trade. All right, and you can see how this market pumps, coils, and dumps. All right, but we're going to take a closer look here on the 1 minute chart, right? We have our pump sideways down. Okay, I don't know what is going on the screen right here, but all right, and then here on this 1 minute chart, you can see what I'm trying to show you here, right? Where we pump up, we dump, we pump back up, put in a middle structure. Here's our little micro M formation right here. And look at how price is behaving with that EMA, all right? Up here, we've got pin bars, engulfments, okay? We go through that EMA, we break this middle structure right here. Bam, there's the entry, stop loss. It's like a 25 pip trade or something like that. And that's just how it is on the currency pairs. You're not going to be hitting a lot of, 150, 250 pip moves on these currencies, okay? But you got to learn how to take 20 pips out of the market. You know what I'm saying? 20 pips is 20 pips, bro. Okay? You can do that. You could also secure a safer entry right here as we break down. You can see we break those lower lows on the inside. The market then pumps, coils, and dumps, pumps and coils into that EMA on the way down. All right? Simple, simple stuff. Keep it simple. Okay? Keep it simple. I hope that this video makes sense, man. I appreciate y'all stopping by and, spending your time here with me. I hope that this video makes sense out of some of this stuff for you. You know what I mean? If there's something I can do to improve it in the future, please let me know in the comments. Don't forget to like the video, share it if you got something useful from it, right? But until next time, I hope you continue to free your mind.